Hey guys, welcome back to the channel. So, we've talked about a bunch of different things, but, one of the things I want to really dive into that's a big topic for a lot of people is taxes, right? We're going to talk about like what taxes are, understanding them, different types, stuff like that, right? First off, like what are taxes, right? Well, taxes are mandatory contributions levied on individuals or corporations by a government entity, right? Local, regional, or national, all right? Tax revenues finance government activities, public works and services such like roads and schools, or programs like Social Security, Medicare, stuff like that, right? In economics, taxes fall on whoever pays the burden of the tax, whether this is the entity being taxed, such as a business, or the end consumer of the business's goods, right? From an accounting perspective, there are various taxes to consider, payroll, federal, state income taxes, blah, 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 a bunch of stuff, right? Let's kind of understand this, right? So, to help fund public works and services, build and maintain the infrastructure used in a country, a government usually taxes its individual and corporate residents, right? The tax collected is used for the betterment of the economy and all who are living in it, right? In the United States and many other countries in the world, income taxes are applied, right, to some form of money received by a taxpayer, right? The money could be income earned from salary, capital gains from investment appreciation, dividends, or interest received as additional income, payment made for goods and services, and so on and so forth, right? Tax revenues are used for public services and the operation of the government, as well as for Social Security and Medicare. As baby boomer populations have aged, Social Security and Medicare have claimed increasingly high proportions of the total federal expenditure of tax revenue. Throughout U.S.'s history, tax policy has been a consistent source of a bunch of political debate, right? A tax requires a percentage of the taxpayer's earnings or money to be taken and remitted to the government. Payment of taxes at rates levied by the government is compulsory. A tax evasion, the deliberate failure to pay one's full tax liabilities, is punishable by law. On the other hand, tax avoidance, actions taken to lessen your tax liability and maximize after tax income, perfectly legal, right? Most governments use an agency or department to collect taxes. In the U.S., that's performed by the IRS, right, the Internal Revenue Service. So let's talk about the different types of taxes, or just some of the several of the common types, right? So income tax, a percentage of generated income that is relinquished to the state or federal government, right? Then we've got a payroll tax, a percentage withheld from an employee's pay by an employer who pays it to the government on the employee's behalf to fund Medicare and Social Security programs. Then we've got a corporate tax, a percentage of corporate profits taken as tax by the government to fund federal programs. Then we've got sales tax, taxes levied on certain goods and services. It varies by jurisdiction. That's going to move us on to property tax, based on the value of land and property assets. Then we got tariff, right? Taxes on imported goods, imposed with the aim of strengthening, internal businesses. Then we've got an estate tax, right? It's the rate applied to the fair market value of property in a person's estate at the time of death. The total estate must exceed thresholds set by state and federal governments, right? Tax systems vary widely among nations, and it's important for individuals and corporations to, really kind of study, tax laws before, earning an income or doing business there, right? We should look at, various tax situations in the U.S. And generally speaking, the federal government levies income, corporate, and payroll taxes, right? The state is going to levy income and sales tax, and municipalities or other local governments mainly levy property taxes, right? So, income tax, right? Like many nations, the U.S. has a progressive income tax system through which a higher percentage of tax revenues are collected from high income individuals or corporations than from low income individual earners, right? Taxes are applied through marginal tax rates. A variety of factors affecting the marginal tax rate that a taxpayer will pay, including their filing status, right? Married, filing jointly, married filing separately, single, or head of household. Which status a person files can make a pretty big difference in how much they're taxed. The source of a taxpayer's income also makes a difference in taxation. It's important to learn the terminology of the different income types that may affect how income is taxed. Capital gains, right? Taxes are a pretty big relevance for investors. Levied and enforced at the federal level, these are taxes on income from the sale of assets in which the sale price was higher than the purchasing price. These are taxed at both short and long term rates. Short term capital gains, right? Assets sold 1 year or less after they were acquired, are taxed at the owner's ordinary income tax rate. But long term gains on assets held for more than a year are taxed at a lower capital gains rate, right? On the rationale that lower taxes will encourage high levels of capital investment. Tax records should be maintained to substantiate the length of ownership when both the assets were sold and the tax was return was filed, right? So then we've got payroll taxes, right? And these are withheld from an employee's paycheck by an employer who remits the amount to the federal government to fund Medicare and Social Security programs. So in 2021, employees pay 1.45% into Medicare on all wages and 6.2% into Social Security on the first 142,000 earned. Now going into 2022, this Social Security wage base limit increases to 147,000. There is no salary limit for Medicare tax, but anyone who earns more than 200,000 as a single filer or 250 for married couples filing jointly pays an additional 0.9% into Medicare. Payroll taxes, they both have an employee portion and an employer portion. The employer remits both the employee portion, right, like we just talked about, and a duplicate amount for the employer portion. So the employer rates are the same 6.2 for Social Security, right, up to the wage base limit, and 1.45 for Medicare on all wages. Therefore, the total is going to be 15.3% for Social Security, right? Or 15.3% total, right? 6.2% on the employer half and employee half, and 1.45 on the employee half and on the employer half, right? So that's going to total 15.3%. So payroll taxes and income taxes, they're different. Although both are withheld from an employee's paycheck and, given to the government. Payroll taxes are specifically to fund, Social Security and Medicare programs. A self-employed individual must pay the equivalent of both the employee and employer portion of payroll taxes through self-employment taxes, which also funds Social Security and Medicare. So then we've got corporate taxes, right? And these are paid on a company's taxable income. There's a couple steps to calculate a company's taxable income, right? So basically, like sales revenue minus the cost of goods sold is gross profit. And you take gross profit minus operating expenses, right? General and administrative expenses, selling, marketing, research and development, depreciation, all that stuff, right? And that's going to equal your earnings before interest and taxes, right? And then you take that minus your interest expenses, and that equals your taxable income. The corporate tax rate in the U.S. is currently a flat 21%. Before the Tax Cuts and Jobs Acts of 2017, the corporate tax rate was 35%. So then let's get to sales tax. Well, sales taxes are charged at the point of sale when a customer executes the payment for a good or service. The business collects the sale tax from the customer and remits the funds to the government. Different jurisdictions charge different sales taxes, which often overlap, as when states, counties, and municipalities each levy their own sales tax, right? As of 2021, the highest average state and local sales tax is found in Tennessee at 9.55%. 5 states do not have a state sales tax: Alaska, Delaware, Montana, New Hampshire, and Oregon. Alaska does allow municipalities to charge local sales tax, though. So then moving on to the next one, we're going to talk about property taxes, right? A common property tax in the U.S. is real estate, right? A you know a millage rate is used to calculate real estate taxes. It represents the amount per every $1,000 of a property's assessed value. The property's assessed value is determined by a property assessor appointed by local government. Reassessments are typically performed every 1 to 5 years. Property tax rates vary considerably by jurisdiction. Property taxes can also be assessed on personal property such as cars or boats. In the fiscal year 2018, the state with the highest property tax collection per capita was New Jersey at 3,378, right? The District of Columbia would rank higher if it was counted within the 50 states at 3,740 per capita. The lowest state ranking was almost $600 per capita is in Alabama. So then let's talk about tariffs, right? You probably don't hear about this one too much, right? A tariff is a tax imposed by a country on the goods and services imported from another country. The purpose is to encourage domestic purchases by increasing the price of goods and services imported from other countries. There are two main types of tariffs: fixed fee tariffs, which are levied as a fixed cost based on the type of item, and ad valorem tariffs, right? Which are assessed as a percentage of the item's value. So just like how we talked about the real estate tax, right? Tariffs are politically divisive, right? They got debate over, the policies work as intended or not. So then we have estate taxes, right? And these are levied only on estates that exceed the exclusion limit set by law. In 2021, the federal exclusion limit is 11.7 million. Surviving spouses are exempt from estate taxes. The estate tax due is the taxable estimate, or the taxable estate minus the exclusion limit. So, as an example, a 14.7 million estate would owe taxes on 3 million, right? The difference between 14.7 minus 11.7, right? 3 million. So the estate tax rate, it's a progressive marginal rate that increases, really drastically from about 17 or 18% all the way up to like 40%. The maximum estate tax rate of 40% is levied on the portion of an estate that exceeds the exclusion limit by more than 1 million. So states may have lower exclusion limits than the federal government, but no state taxes estates less than 1 million. Massachusetts and Oregon have the 1 million exemption limits. States' rates are also different from the federal rate, right? The highest top state estate tax is Hawaii and Washington at 20%. So estate taxes are different from inheritance taxes, in that an estate tax is applied before assets are dispersed to any beneficiaries. An inheritance tax is paid by the beneficiary, right? There is no federal inheritance tax, and only 6 states have an inheritance tax, right? Iowa, Kentucky, Maryland, Nebraska, New Jersey, and Pennsylvania. Well, what does this all mean? Like, what are we talking about here? Well, there are many types of taxes, right? There's a bunch of them, and they're applied in a bunch of different ways. Understanding what triggers a tax situation can enable taxpayers to manage their finances to minimize the impact of taxes. Techniques that can help include annual tax loss harvesting, to offset investment gains with investment losses, and estate planning, which is going to work to shelter, inherited income for their heirs, right? So I really hope, it's a bunch of information, and some of it's really technical, but, understanding taxes is where a lot of people, you can really, save yourself some money, right? So I really hope you guys enjoyed this video. If you liked it, go ahead and hit that thumbs up button. Subscribe if you're not already subscribed. And so I'll see you guys in the next video. Y'all be safe.